I think I'm going to use Steve Carell's line in there when he says that an even sexier idea would be putting money into a Roth. Yes. Hi there. My name is Jordan Schwartz. I'm a licensed financial advisor with Strategic Wealth Designers, and today I'm going to be reacting and breaking down to some Hollywood blockbuster movie scenes, and I have no idea what I'm about to see. Wolf of Wall Street. I have seen this movie before. This is not how financial advisors are supposed to be. All right, as funny as the movie is.
Now, the key to making money in a situation like this is to position yourself now before the settlement. Because by the time you read about it in the Wall Street Journal, it's already too late.
Sweet, so in The Wolf of Wall Street, Leonardo DiCaprio is a stockbroker. I am a financial advisor. So what's the difference? The big difference. So a stockbroker calls people and pitches a stock to them. That could be anything. It could be Disney, AT&T, Coca-Cola, whatever the company is. The difference between a financial advisor is I'm not a stock picker. I help a client with their holistic retirement planning. So helping them build a plan and a strategy that helps them achieve what their goals and objectives are. Now, even though that movie makes it seem like a lot more fun, I'm biased. I think what I do is more fun than what he did in that movie.
I don't know you. You cold called me. You're a total stranger.
I am in complete agreement with you. You don't know me, I don't know
Take a
you.
moment to introduce myself to you. My name is Alden Kupferberg.
And I plan on being one of the top
brokers of my firm next.
Seeing them deal with new clients, if you're a financial advisor, never treat your client like that. They're a human being and they are an equal in this relationship. So how we should deal with a new client is treat them with respect, be honest and transparent, and make sure that whatever you're recommending to them is what is best for that client. I also am on Zoom, so I don't even use the phone that much. Most people do email now too, so.
You give me one shot here on a blue chip stock like Kodak. And believe me, Kevin, the only problem you're gonna have is that you didn't buy more. Sound fair enough?
So a penny stock is either a new company or they just listed public and their goal is to raise capital for their organization to grow and build. A penny stock is the single riskiest type of stock that there is. They're usually really speculative, and yeah, you can hit a massive home run. It can go from 10 cents to $10, and that's awesome when it does. A lot of those companies can go belly up. So a penny stock gives you high upside, but you're probably more than likely to strike out with a lot of those. Yeah, so what you're seeing in that scene is they're doing what's called like a pump and dump. And basically what that is they're picking a stock and they're pitching it to all of their investors and they're trying to artificially up the price of the stock. Maybe they even have money in that too. Don't do that, that's not ethical. What they're gonna do is they're gonna try to up the price of that stock, or they're pitching stocks that they don't believe in, because in this scene, in this movie, they're getting much bigger commissions on the penny stocks as they would be getting from the investments that are better for the consumer. And you always wanna put your interests, put the client's interests first. Your interest should never be before the client's. Oh, date night. My wife loves this movie. I do too, this is very fun.
Well, it looks like we will be able to get you a refund of about $600.
Shut up.
Shut up.
Shut up.
Steve Carell, he'd make a good financial advisor, I can see it. He's got a good personality. So when I meet with a client, what percentage of the people I meet with are happy maybe about their investments and what percentage aren't? A lot of it depends on what they've got. So when I'm meeting with someone and their fees are super duper high, they've got too much risk in their portfolio relative to their goals, they're not performing the way they need to, they're not generally happy, but here's the cool thing, they can fix those types of things. So even if it's not fun at first, the awesome solution is, hey, I've had clients before pick up thousands and thousands of dollars a year just by fixing the fees in their portfolio.
Oh, we are going kiteboarding in Spain.
Guys,
like, how
guys,
sexy is that?
Guys, you know what would be even sexier than that? Is starting a Roth IRA.
Yes! Yes, so obviously it's not fun to save, it's more fun to spend. The truth is though, if they invested that $600 or however much it was, and they didn't touch it, they put it in the S&P 500, and they didn't look at that for 20 or 30 years, that could be a lot of money potentially, and then they could do a lot of trips with that money in the future. So it's like the idea, it's not fun, it's the pain of discipline or the pain of regret. And I think that guy, Brad, he was actually in The Wolf of Wall Street too, funny enough, in that scene. The Big Short, I love this movie. Steve Carell's in this too.
Swaps on mortgage bonds, credit default swap that will pay off if the underlying bond fails.
You want to bet against the housing market?
Yes.
So in this case, Christian Bale's character says he's betting against the housing market. So what the heck does that mean? The movie's called The Big Short for the reason. I'm gonna blow some minds here. So if you go long, that means you're betting that the market does well. If you're going short, you're betting that the market doesn't do well. So in this case, all he's doing is he's betting that the housing market is gonna fall, and then because he's shorting it, he's gonna profit on the downside as opposed to the upside.
Those bonds only fail if millions of Americans don't pay their mortgages. That's never happened in history.
Yes, it's a foolish investment, but everyone's wrong.
That's a good one.
So why did they think that Christian Bale's character is crazy in this scene? So it's kind of funny. Up until 2008, see, I think there's this concept in economics. I wrote a paper years ago on this. It's called recency bias, and it's an investor behavioral kind of condition. And this is what's happening with the people at Goldman Sachs. They basically think that because something hasn't happened before, or it hasn't happened in a really long period of time, it's less likely to happen. But in this case, Christian Bale saw what no one else saw. He saw the writing on the wall. People were overextended, making poor decisions, and people thought, oh, housing's always going to keep going up. Every investment has its summer and it has its winter, and they just weren't prepared that the U.S. housing market was going to go through a winter.
You have any idea what you just did?
Come on, we just made the deal of our lifetimes. We should celebrate.
You just bet against the American economy. If we're right, people lose homes, people lose jobs, people lose retirement savings, people lose pensions.
How bad was the 2008 financial crisis? I mean, I'm not trying to make light of it with this word, but it was a doozy. I mean, you look at what happened is housing struggled. We had to print and have all these massive government bailouts, huge institutional investment banking firms, Bear Stearns, places like that, they closed because of issues like that, because they were so overly leveraged. And I think kind of the sentiment of it was capitalism is a wonderful thing. You saw a lot of institutions during this time just have so much greed. They negatively hurt the U.S.'s economy. And I think with this whole scene, you see them laughing and joking that, but that's not a laughing matter. I mean, millions of people lost their homes and it was really tough. And I think that should be a lesson for everybody out there. Don't overextend yourself so when there are the winters in our economy, you're better prepared.
Here's a number. Every 1% unemployment goes up, 40,000 people die. Did you know that?
No.
Did you know that?
No, I didn't know that.
Whoa, I just got really scared.
I think the reason why no one saw 2008 coming is because we'd never seen a drop in the housing market before like that, right? We were operating in this time where we were getting out of high interest rate environments. There was more loose monetary policy, and the big thing that started to cause shifts was the lending market was super fast and loose with how they were allowing people to purchase homes. People were able to buy things that they couldn't afford. So I think what happened was it just got bigger and bigger and bigger. There's almost this idea where when something like becomes such a big problem, it's easier to ignore it than confronting it. And I really feel like that's what was happening with a lot of these big institutions. They thought, oh, we don't have to worry about this for a couple of years. And it came because it was time with what happened. Oh, Limitless. Bradley Cooper, I like him. He's a good actor.
In a down market, no one was making much. But no one had NZT. Armed with Vern's last $800, I made $2,000 in a day. Next day, $7,500.
All right, in this scene, Bradley Cooper's character says he's making $2,000 in a day, and then that went to $7,500 a day. So how realistic actually is that? Is that possible? Well, first of all, I don't condone drugs. I don't think that's a good idea. I don't even think that what he had is even maybe possible. Anyways, how realistic is that? It's incredibly unrealistic. If you try to time the market, and you got to be right twice, when you buy and when you sell. Yeah, it'd be awesome if you could double your money every single day. And there are people who are day traders that have success with that. But doing something like that, I mean, 3Xing your money in a day, that's not a consistent possible thing. I know the movie's cool and he gets the cool hair and the sweet suits and that stuff. That's not a realistic thing.
My new friend, Kevin Doyle, showed me how you could leverage 2.5 times your cash at a day trading firm. It seemed to cut my learning curve.
Okay, so here Bradley Cooper is using a drug to help him learn the ways of the stock market. So if you're a regular guy, the stock market is a jungle. So if you look out there, there's multiple thousands of stocks that exist. And if you look, like, no one has figured out the stock market totally. Some people say, well, no, Warren Buffett has. Warren Buffett is the best in the world at taking old distressed companies and resurrecting them. You look at a guy like Ray Dalio. He's not fully in the stock market. He's diversified a lot against a lot of different things. So for a regular guy, I think the stock market's a jungle, but that doesn't mean that you can't tame the jungle. You just have to spend a lot of time and don't use synthetic drugs. Wall Street 2, Money Never Sleeps. Well, I've seen all of these movies. Shia LaBeouf. There we go.
I never made any money shorting Hydra.
You're kidding me, you didn't trade it?
I would have been insider trading, Mr. Gecko. Remember, your daughter and I are engaged. You wouldn't want to soil her name, right?
Yeah, so here in this scene, they're talking about insider trading. So what does that mean? Insider trader means that you're trading off of inside non-public information. If you look at companies, over time, a lot of people get busted for this, and here's why. If I think this was something that happened with Martha Stewart like years and years ago. She had inside non-public information, and she used that to make a huge profit or sell certain investments to protect herself. Well, you can't do that because that's not public access and public information. If something bad comes out about a company, it's going to negatively impact the stock. If you know that before and you make a decision based off of that, then that's trading illegally, and then you can get yourself in a lot of trouble. That's sometimes jail time, so don't do that.
Well, you may not have traded, but you tried telling the feds you didn't commit a felony.
What do you mean?
You know exactly what I mean. You induced others to trade on information that you knew to be false.
So can you get in trouble for insider trading if you're not aware that you're doing insider trading? I think you have to be able to legally prove that you weren't trading off of public information. Sometimes someone gets really lucky. But if it was inside information and you knew it wasn't public, or maybe you didn't know it was public and you still profited off of that, it's going to be really hard for the feds to be able to say you didn't know something that you weren't supposed to. So if you do have information that you hear about a company, like, oh, I think I want to buy that stock, check and make sure that that information is public before you do that, so that you stay above the law in that movie. I love this. I feel like I'm a translator for all these movies. This is great. Money Monster. Okay, here we go. I think this is George Clooney, yeah.
You lost a lot of money. You went on TV, you said it was safe. 4 weeks ago, you stood right there. This is what you did. Let's get into this. Oh, Ibis, safer than a savings account. I didn't say that.
So yeah, there's a lot of financial experts on TV, and I'm gonna put quote-unquote experts. Some of them are, but not all of them are. And they've got stock picks or investments, and they broadcast this to a lot of people. And the danger with that is they're not always right. And then you also have to think too, are they maybe broadcasting things for their own selfish intent? So the danger with doing that is that they're not always right. And I think more importantly, anytime you're making an investment decision, it shouldn't be because someone told you to buy it. It should be because maybe someone gave you hey, I like this stock a lot. And then you do your own research and come to the conclusion that you like it. You should never base your financial decisions off of just what someone says. You need to at least understand it and make sure that it makes sense to you and it aligns with your goals too.
That's what you said.
I recommend it, but I never said it was safer than a savings account.
You want to bet? Come on, let's bet. You said it was safer than my savings account. I would never say it. Come on, let's bet. March the 6th, it was stock pick of the millennium, March the 6th. I make a stock pick every single day. That's a fucking joke.
So if you're someone who's wanting to get into investing in the stock market, best practice would be read, do research. There is so much content. I mean, you could get a self-taught doctorate on the stock market and investing if you spent the time to do it. It's the best practice, the best advice I'd have for you is read and do your research. And more importantly, anyone that you're listening to, understand what their track record is. Are they successful? Do they know what they're doing? Because you don't want to take advice from someone who doesn't know what they're doing. I hope you guys enjoyed me breaking down those scenes from those movies. I'm gonna have to watch Money Monster. If you saw or noticed that we missed any videos on here, or there are any movies that you'd like us to do, leave a comment below. Go ahead and like the video, and then if you'd like more awesome, super duper cool content like this, go ahead and subscribe to our YouTube page to get more content just like this.